Information provided in this video is for educational and informational purposes only and should not be considered financial, investment, tax, or legal advice. Investing involves risk, including the possible loss of the principal. Always do your own research and consult with a qualified financial advisor before making any investment decisions. The opinions expressed are those of the host and the guests and do not necessarily reflect the views of any affiliated organizations.
Okay, today is the 6th of July, after the 4th of July 250-year anniversary of the founding of the United States. We are now coming into the second half of the year. We're just looking at the changes in the week. In the USA, generally you do get a rally coming into July the 4th. There's certain sort of holidays that they do rally the markets for the week. Whether it's a feel-good factor or not, not too sure, but it just seems to happen. Bitcoin had a little bit of a bounce, up 5.5%, still trading around the 62,000 levels, though. 61,000 is where people are in below water, so it's still gravitating around that level. So it'll probably stay there for the next few weeks, I would think, until they figure out what they're going to do with it. Generally looking at, strange enough, the infotech sector in the States, that was up 1.8%. It was probably the smallest rise of most sectors in the States, except for the energy, which was down 1.6 on the back of oil coming down 2%. The Nasdaq itself, just looking at it, it's about 3.5% off its highs, which was a couple of weeks ago. John, do you think it's sort of reached a plateau here, or is it just taking a break?
I don't think it's reached a plateau at all. I think the Nasdaq has been going up for the last 20 years. It's gone from, crash down to about 600 when the dot-com bubble happened back in 2000. And now it's up, it's just crazy high from there. I think all the innovative stocks in the technology sector, which is driving the economy and it's probably likely to do so for the next 10 years, are going to end up in the Nasdaq. So I do think it's, it'll take little breaks and then get going again. But, of all the indices, it seems to be the best one to be involved in.
So do you think as well that if people are thinking of buying shares that are in Nasdaq currently, you really need to pay attention to what's going to come out versus what's going to go in? Judging from what we talked about last week, if you're looking at the bottom, say 3 or 4 stocks, are they stocks you just don't want to go near? Because if you think there's a huge group of stocks coming down the road that are going to go into Nasdaq, obviously you don't want to be buying the bad stuff, so to speak.
Yeah, that would make sense. Mm-hmm. But when stocks come out of an index, that means the index the index trackers have to dump those stocks, and that would go a long way to explaining what happened to stocks like Cognizant when they had that pretty decent sell off, just before they were dumped out of the index. Right. See, I'd be a little bit wary about that, but we need to look into that further. We haven't. I'm sure there are dozens of studies around that we can just quickly access, but we do need to look into it further ourselves.
Okay, we'll do that during the week. There was big news from Meta, by the way. I don't know I presume you saw this, John, that Meta had, it's a bit of a change of strategy, is it? Was that how you would describe it?
Yeah, well, Meta announced that they were going to sell excess data center capacity, and their shares were about 10% in the back of this because they were going to monetize some of the AI build out they've been involved in. On the other hand, you've 2 companies like Nebius and CoreWeave, which dropped 17 and 14% respectively on the back of this news. So, Meta up 10%, these 2 companies down more. It's huge news, and it is a kind of shift in strategy a little bit. You say they're going to join the Neo-Cloud business. They're going to effectively rent out their tools that they're developing in AI. But what's really behind it? I think there's I think we have to go a little bit deeper in this one because there's quite a bit in this.
But we've had this narrative for months that there is no excess data, that everything, it's the whole sort of narrative behind NVIDIA and all that has been, we are short data space AI centers, and that's why the value of these NPUs and the chips are so high. So that's been the whole narrative, and suddenly you got this company coming out during the week that says we're selling excess. Where did this come from?
Well, I don't know. I'm a little bit suspicious about the whole thing. Now I think to understand what's happening here, I think you have to look at Meta as a company and what they've done in the past and what they're doing in the present. if you look at the movie, even The Social Network, which portrays Mark Zuckerberg and how Meta came to being, even that gives a little bit of insight. Now I don't know if that's 100% factual or fictional, but I gather from the reviews that there's quite a bit of fact involved in that. And if you look at where Meta came from, it was Zuckerberg was hired by the Winklevoss twins to build a platform for them to allow people at the different Ivy League universities to connect with each other and mingle with each other.
Yep.
Which Zuckerberg did, but he liked the idea and he used it for the world. He said, well, why not let the whole world connect?
I think the big difference is the Winklevoss twins wanted it for Harvard and the Ivy Leagues, and Zuckerberg
Yes.
wanted it for the world. I think that's the big difference.
Well, I think Zuckerberg saw the potential of the actual thing and said, well, actually, this works for the world. It doesn't work for the Ivy Leagues. Whereas the Winklevoss said, oh, this is an Ivy League thing, and Zuckerberg said, no, it's for the world. And obviously he's done much better than they have out of it. So,
however, don't forget though, they are probably one of the largest Bitcoin holders is the Winklevoss brothers.
They're very innovative.
Yeah, they're basically doing world tours saying how great Bitcoin is. So that's what they're into now.
They're heavily involved in it. Now, that's the first thing. I'm kind of wondering. Mark Zuckerberg has seen data centers are making huge amounts of money. They're projected to make huge amounts of money in the future. He's contracts with Nebius and CoreWeave. He sees what they're doing, and now he's just going to copy it. Very similar to what happened with the Winklevoss twins.
Mm-hmm.
If that is the case, this is not good for CoreWeave or Nebius. And maybe 14-17% down isn't enough. Maybe they should be down more. But on the other hand, building structures and putting these things together, it's not Meta's business. This is a completely different path, as far as I can see. And I would be kind of surprised if this is what they're really interested in. But whatever their end game is here, it's definitely taking a chunk of the neo-cloud providers, and it's most likely going to reduce the price of compute in the future, which is a very good outcome for Meta either way. Even if it is a kind of a bit of a spoof, but who knows? And you got to remember that Mark Zuckerberg has paid. He's offered people £100 million 4-year contracts to come join us, to come join our AI revolution. Now, if you're offering somebody £100 million or euros or dollars, I should say, you're not saying, yeah, come in and we'll show your culture and maybe we'll get you to work in these projects. I'm kind of assuming that he's basically saying, come work for us, do what you do for these guys, do it for us. I don't imagine he's paying 100 million quid to somebody to just come and sit at a desk and do one of his projects. I assume he's getting these people in to bring knowledge.
Yeah, well, that's quite standard, like business practices. There's nothing new about that. You take the best people and you pay them more for what they've done.
Yeah.
You're basically paying for their research work over the years, that's just normal business. That happens everywhere.
Yeah.
That happens in bank.
They have worked with Nebius, they've worked with CoreWeave, but there is a positive side to this as well. On the flip side, they may decide, well, actually, we have to build these data centers, we have to manage a completely different division, etc. Do we really want to do that? Maybe we'll just buy one of these companies. It will be a much easier, cleaner solution and much faster too.
That's what I said weeks ago, that if I was one of the giant companies, I just let them all get into huge debt and I pick them up for nothing at the end of it,
Well, they won't get them for nothing, but the announcements definitely hit
relatively.
The announcements definitely hit the share prices and made them cheaper to buy now. So, if this is the play, it's quite clever.
You said that Nebius is down 17%. What percentage of Nebius and CoreWeave's business was Meta? Is it was Meta the big one, so to speak? Because I know Apple are doing their own thing, right?
I have the numbers for these actually.
Go on, yeah.
Meta had 35 billion in contracted power with CoreWeave. As part of CoreWeave's backlog, which is about 99 billion in orders, 35 of that is coming from Meta. For Nebius, they've 46 billion in backlog. 27 of that is coming from Meta. Now,
Jesus,
of that 27, 12 of it is guaranteed, no matter what happens, at a certain price and over a 5-year period. But of the other 17, that's kind of like a backstop. So they've told Nebius, go ahead, build these centers, and we'll guarantee to take 17 billions worth of compute off you in the future once you do this. So that gave Nebius confidence to go ahead and build these centers.
So that's
But
roughly
Nebius
25%. That's roughly 25% then, which is the stock being down 17%. Obviously, it's not just going to fall 25%, but that 17% is representative of not the 5 years, but the loss after the 5 years, possibly, unless they get some new customers.
Yeah, well, the thing about that backstop agreement is quite good for Nebius, in terms of they get paid no matter what. Same as CoreWeave. CoreWeave have a contract saying that you either buy the power off us and use it, or else you just pay us anyway. So it's a great contract for both those companies, and it's part of the reason they have expanded so aggressively, and the banks they've been able to borrow money quite cheaply on the back of this as well, because those guarantees are in place.
Did you take a bit of profit on your Nebius shares?
I did, sadly not enough. I actually could, the run up to close to 300. I took about half it off the table at that stage. If I knew this news was coming out, I obviously would have taken it all off the table. There's a few pluses and minuses. Some people on the internet are saying, yeah, this could be a great thing. It just shows that they're saying this long term, this is better, but I don't kind of buy it. They seem like people with vested interest, like myself. I'd love the share price to jump on good news, but this to me is not good news. The only positive I can take from this is maybe, Meta have a history of just paying up and buying things. I mean, the best example is they just bought WhatsApp, for close to $20 billion back in 2014, and people laughed at them. They thought that was madness, but it turned out to be a great buy. So I think they Meta have a history of paying up for stuff, where we pay £100 million contracts to an individual. We pay 20 billion for a company that's not making money, and people thought that was mad. But they've made some very, very gutsy, ballsy moves in the past. And, to turn around and say, okay, Nebius, we'll buy you, we'll X amount, we'll double your valuation overnight. It's possible, but there are too many Neo-Clouds out there. Are you going to get lucky and buy the one that maybe Meta might buy? Very unlikely. So for me, this news from Meta, it signals weakness in the AI sector, and it's particularly bad for companies like Nebius and CoreWeave and Iron. Although having said that, they're off. Nebius is down from almost 300 down to 220. It hit about 207s, 208s on Friday. So maybe there's a bit of value in it again, potentially. But there's no dressing this up. This is bad news for those companies.
Right. Okay. All right, Jeff. We were just looking at in Europe, industry is up 5.6%, which is the largest climb in industry within Europe. Now, to be honest, though, if you look at the top 5 stocks in it, you got Siemens AG, which is 8.5% of this index. They're up 5.5%, but their shares are nearly up 50% on the year. I shouldn't say, but they are. ABB, which is
on the year, but
Swedes.
year to date, they're only up a little bit less than that, right? I think they opened around 260.
Yeah, year to date.
About
So yeah, I
280.
suppose I go back
They did
to
dip.
25. Yeah.
Yeah, and I think they dipped a lot on maybe the energy prices, when the energy sort of has gone up. Then recently, as energy costs have come down and a bit of month end buying, they've sort of pushed on ahead last week.
The big one though is Siemens Energy, which during the week, like they are up 8.6% during the week, but this seems to be a very interesting company. And I remember you talking about this company months ago as a great buy, but they now have got long-term contracts with the Omani government for gas turbines, which is, as we were always talking about, these are the guys that they're the picks and shovel guys. Would you say that?
Yeah, well, it's funny. I think even Iberdrola, they buy from Siemens Energy, and obviously the data centers.
Yeah.
I think, myself and John were talking about Siemens Energy, I suppose a year and a half ago. I think I bought them at about $9 a share.
Jeez, well done.
And wherever I sold them, forget that. But so basically they've been involved in they've come along. If you map them with, say, growth in the AI companies or a lot of the high energy production companies, say for the US, for the data centers, they've matched them pound for pound on the way up. So they're definitely a leader in that industry, and they've had huge backlog wars.
Even though looking at their share price throughout the whole Iran war, when oil did spike up to $120, there wasn't a huge effect in their share price. I mean, there was a little profit taking or something like that, but there wasn't, like, the trajectory is still up.
I think they're involved in producing stuff for the data centers.
Yes.
And the data center growth has been there. I'm sure the cost of oil and energy, drives their baseline cost up a little bit, right? But
might just make margins a bit tighter now.
yeah, exactly. But then again, I don't know what the high end margin is on producing these things. If you're one of the only guys doing it, I'm pretty sure the margins are pretty good. I mean, I'll look into that for next week because that's actually, I'd be interested to know.
Can I say, guys, that Siemens Energy, they're heavily involved in wind farms, offshore wind farms. The reason their share price had dipped down to about $9 or $10, a year and a half ago, 2 years ago, was they had to do a kind of recall on some of the offshore farms, which was really expensive. Bring stuff back onto land, fix it, get it right, get it working properly again. All the wind farm companies had issues like that, and they were very public about what happened. And there was one stage when the share price dropped that the government actually had to backstop them a bit, and but since then it's just been one-way traffic. And if you look at ABB and Schneider Electric, they're involved in the electrification of data centers. I remember reading about ABB, their report last year, about 12 months ago. They were saying that the data centers have part of our business where we're losing money. We're actually making money now, and we only see this as going forward. And it's been a slow build, but yeah, they're a completely turned around company on the back of business from data centers.
So they have fingers in many pies, to be honest, don't they?
Well, electrification is mostly, yeah. But I mean, they had a robotics unit which was hyped, and they sold off for about $5 billion. But that was only a small part of their business, relatively speaking.
Mm-hmm.
But their main business now is electrification and data centers. Yeah.
But this also links into, there was a very good article came out late last week about Volkswagen, which they're having a board meeting on July the 9th. And this is kind of rare for a German company, but they're looking to shed 100,000 jobs. Now, it's a huge amount of jobs. I think they employ about 600,000, 500,000 people anyway. But still, this is huge. It's the German unions have always worked they have a fantastic setup in the German system, and that the unions look at the company and say, okay, how can we help the company? And then the company says, how can we help the workers? It's a very good system, which means they get very, very few industrial strikes and things like that. Like, it's not like the unions are grabbing for as much as they can. They're realists. They actually say, look, things aren't doing very well. Now, with the input of the Chinese cars to the European market, the difference in prices for Volkswagen is about €6,000 per car versus each Chinese car is about €1,000. So Volkswagen is, I'd say they have to face reality here, and it looks like the European Union isn't helping them that much, because they have to basically face up to the fact that even though there was a period of time when the Chinese cars were not great, but now the Chinese cars are brilliant, and they are. As I was saying last time, a friend of mine owns one. They are fantastic cars, and so Volkswagen has lost that edge. So I was looking at the share price, Jeff, and it's like, okay, it had a 4% rally, but as you said, 4% rally from nothing. So, what did you think about the share price?
Just when you're talking there, you're raising quite a lot of questions about everything, really, about competition with China, electrification, electric vehicles versus sort of European petrol and diesel cars. Volkswagen and Mercedes, BMW, they've all lagged. They've all been in trouble, say, for the last year and a half, 2, 3, 4 years, as China has started producing very well manufactured electric cars for a very reasonable price. Yeah, I think they're going to be in trouble, and they are in trouble. And then in regards to the unions, do work very well with the company, but I think that what I read somewhere is that certainly the Germans are the best paid in the industry. So you have high labor costs, and you have a lot of labor, and you have huge union input. And I think that sort of led earlier for Tesla and stuff to come in, manufacturers around the world or in China, alongside what Volkswagen would have set up in China as well.
Yes.
But I think at home, it's very hard to restructure that. Like they're talking about, as you said, maybe laying off 100,000 people. It'd be very hard to swing by the unions. So,
But I think the unions are quite practical. It's not like they can't see what's happening. It's like, it's funny thing about the Germans, like they nearly sold their soul. It's like Germany was famous for the engineering behind the engineering, okay, for the machines that build the machines, and then they just farmed it all out to China, gave
yeah.
China
Well, they
everything.
sold a lot of China. They sold a lot of their machines, and then
Yeah,
China turned around and and started remanufacturing these machines
yeah,
and everything else that they needed to do. So Germany was making huge money off exporting to China when the Chinese were probably learning the system, and they've done with the US and other countries. And then they turn around and they start selling stuff back much cheaper, industrial. And plus, you also have, but say you also have the Russian war there as well. Sorry, where the German economy relied or had a lot of cheap Russian energy. On the back of that, they were selling a lot of trucks and cars and industrial machines into Russia as well. So that all dried up then after, whatever, since the Ukraine war, right? So that's dried up too. And then you have tariffs going on from the US, which increases the cost again. So
it's
a lot of things there.
I sort of wonder, is this quite similar to the General Motors story in the States, where General Motors was a company that just controlled everything basically for years. And not saying they got lazy, but they sort of took their eye off the ball a bit, and their share price tanked over the years because competition was getting better and better and better, and they were just sticking to their old Detroit factories where they had to pay very, very high workers. Now, a lot of it has gone to robotics, but Volkswagen's share price has taken a huge fall from its highs. Are you watching out for this? Are you anyway interested in buying it soon?
Yeah,
Or?
I have Volkswagen shares in my portfolio. Not much. It's small, and like, to be honest, most of the losses have been taken. So I think they're going to struggle. I think that even if, for one, you're talking about the unions. If they need to cut 150,000 or 200,000 jobs, and they come to the unions that we want to cut 100, and they agree on 50,
Right.
you're really you're kind of plastering over stuff that really needs a gouging out.
Yeah.
Further, they're talking about arms manufacturers and turning German car manufacturers into producing arms for Germany and for Europe. Not a bad idea, right? But as long as there's a demand. And I actually think with that as well, if they do that, they can get around subsidies, because the German government can buy and subsidize stuff for secrecy. But they are in trouble. They are in trouble from, as I say, particularly Russia, China, the US. They make good cars, they make good machines, but the cost price is just, I think, probably a bit prohibitive.
Well, that's the difference. They do make good machines. And back in the old days, when the alternative was a crappy machine, Volkswagen was good. But now the alternatives are just as good or even better. That's the
Well, they are there. But like, I mean, we have is it a Bosch lawnmower?
Bosch.
Or like we had one, a German, German made, but it's made in China, and it started falling apart. Just small bits left and right, different things. A cable break, and then this breaks. Then I got to jerry rig this or whatever it's called, and fix all these different things. And
Yeah.
like if it was manufactured originally in Germany, it'd still be going, right? But it's gone, and I think that's part of the problem too. Like, I know China has caught up with a lot of product is a better product now.
Yeah.
But still, I don't think it would have been as good as a German product.
Actually, a friend of mine he's a general laborer, and he never buys anything except German tools. And he said that what he's finding now is that the Chinese tools are getting even better all the time. Still, though, he's sticking with the actual German tools. But he did say if the Germans start making the tools in China, he's not buying them anymore.
Well, that's the thing. That's So if you start making, but what's the point? They're not German tools.
Yeah.
He pays up extra for those tools, and but he said I can buy a Chinese screwdriver which breaks after about 2 months, or I can buy a German one which will last me 2 years. So it's kind of that's how he sees it, John. Yeah.
But it definitely is probably narrowing all the time, right? I mean, as because they understand that as well.
I think you're right.
But yeah, so I think I don't know, the auto sector is certainly in a bit of trouble there.
Well,
The other thing is, sorry, if there's talks about increased sort of trade imbalances with China. If you start slapping tariffs on China, you'll have the French there, like LVMH and Richemont and different companies turning around. They'll slap tariffs on sort of maybe the French companies, the French luxury good companies. So they'll be going, oh, don't do that. So it's going to be a difficult one to
sort of stuck in a
balance that
bind.
out. Well, I mean, like as I say, yeah, like if it would make sense. I mean, if you say, well, if you're dumping your Chinese cars here, we're going to slap a tariff on it, and they'll go, great, okay. Well, then if you're dumping your whatever it's a Cartier watches, or then we'll put something on them. It's like, so it's a tricky one as well, because it does definitely needs to be rebalanced. But at the same time, Germany was selling lots of stuff in China for years. Therefore, you turn around when it suits you and put tariffs on. Maybe not.
Well, the board meeting is on the 9th of July, so we'll get news afterwards, and there'll be fluctuations afterwards, down, up, doesn't make a difference. It'll sort of edge itself out over the next month. So I'm just going to keep an eye on Volkswagen. I'm not going near them now till the actual board meeting, because no one has a clue what's coming out with that board. Well, we have a general idea, but we're not too sure what's going to happen. John, just looking at last week, there was a non-farm payrolls come out in the States. Now, for those that don't follow this is it's technically the unemployment numbers for the USA, and they come out every month. Did you watch it?
Yeah, I did. Yeah, it's probably one of the most important numbers that comes out every month, judged by market reaction. Generally, PC non-farm payrolls have the biggest price reaction every month, and the payrolls figure came in a lot weaker than expected this month. There's a couple of anomalies in it, and I'm just going to say them briefly. Payrolls, the jobs added was 57,000, was expected to be at 110,000. So fewer jobs added than expected. But the unemployment rate went from 4.3% down to 4.2%. So, which wasn't expected. It was expected to hold at 4.3%. So fewer jobs were added, but the unemployment rate came down. So what actually happened was that workforce participation actually dropped. And this is a big deal. It's like people who can't get jobs said, right, I'm no longer registering as being looking for a job because I just can't find one. So this is a negative thing. I feel this is very negative, and I think this pattern is going to continue. I don't think for society it's healthy. I think it's quite bad for society, and it worries me a little bit.
There is a thing called there's a thing called the U3 and U6, and the U3 is the non-farm payrolls, but the U6 is the unemployment rate for those that after 6 months stop looking for a job. Now they come off the U3 register and they go onto the U6 register, which we never hear about, but that figure is much higher. So if if after 6 months you haven't found a job, you're not part of the U3 numbers, you go onto the U6 numbers. But we never hear about that because obviously they sort of want to portray good news constantly,
Well, a number that relates to that as well is workplace participation. It's actually down to 61.5% now. So there's a lot of people out there that aren't working, but they're not showing up in the statistics. So that's worrying. The only other thing I'll say about the payrolls figure is that much weaker than expected. So you would think, oh yeah, that's the economy's not doing great, but nowadays bad news is good news. So they see that bad news as saying, okay, well they're not going to raise rates. So effectively, the yield in the bond yields dropped. And because the bond yields dropped, the actual equity market rose as well. So basically, bad news from the unemployment sector has led to an increase in equity prices and an increase in bond prices.
So bad news is good news for the equity market, and good news is good news for the equity markets.
Yes, exactly.
So
it's just
but you said, but you said Walsh is speaking this week as well, though, right? The Fed chair, he's speaking this week, is he? Or no, it's the minutes. It's the minutes, is it?
It's the minutes of the FOMC. They're coming out Wednesday. Now, again, this is going to give us more clues as to how Kevin Walsh is going to behave in the future with regards to setting interest rates, which is the most important thing in the economy. How that path goes. So we'll get some good indications on Wednesday, and we'll be able to talk about them next Monday, and try and build a picture of what his plans are for the future, how closely he's going to align himself with Donald Trump, the guy who appointed him effectively, and is he going to do his mandate, try and get inflation down to 2%, which will conflict with Trump. So we will get some more clues as to what he's going to do in the next couple of days. And I think that's an important discussion we're going to have.
Okay. All right. Just finishing up with the portfolios. This is the best news I've had since I started. It's Cognizant is up 5%. Mother of God, it couldn't go down anymore in theory. But anyway, it's up 5%. And LVMH is my worst loser, which is down 0.04%. So it wasn't a bad week for me from my portfolio. At least things are going the right way. Do you guys want to talk about anything you guys have, or was it all pretty flat for the week? Anything strange?
Well, from my personal portfolio, Nebius is my biggest loser by a long way.
Right.
But again, it's been on it's been up for the last 6 months, so I'm not too fussed about it.
Good.
I didn't see that meta news coming. It's affected it, and I think rightly so, unfortunately. Oncopeptides, I'm still I'm in a hole to see. It's going to be up and down 10% until news breaks, and we find out how it's doing. Does it secure its Japanese deal? Does it get approval for its Pepexi drug for type 3 treatment? All big news. So I'm not really expecting a huge move in it before November, December. So I'm just sitting. I'm just in hold pattern at the moment.
Cool. Jeff, any of your stocks do outrageously good or outrageously bad, or was it pretty flat?
Well, actually, Vivendi was up about 3 or 2.32-ish, and I was looking because I have that in a trading and a pension account, and I was thinking about offloading one.
Yeah.
Just trying to see if I could play a bit of a range.
Champagne for everyone at the end of the week, was it? Or
no, it actually for some reason like Friday, and then all of a sudden it sold off. Of course, down about 3%, and there was no real news on it anyway. So, probably would have been maybe it was near the month end, or actually, I think Spotify might have been up 3% the day before, or maybe it just moved up, kind of in line with that sort of sector. But I'll check later on. I guarantee it's probably down again today. So if I think about selling it,
yeah.
Accenture, I'm still happy enough. Accenture's down quite a bit, but I think that there's a lot of oversell in that sector. I mean, the same with Cognizant. I mean, they're very similar shares. So,
but that had a good bounce. Like that had a good bounce.
Yeah, I'm happy to see what's going on there.
Yeah.
Puma again. Who knows? And Iberdrola with I think that went higher with the industrials and the broad-based rally. Kind of last couple of weeks, it's gone back up. So
good. All right.
No, happy enough.
That's all right then. Okay, lads. Listen, we call it a day there. Very interested to see what happens with Warsh now on Wednesday. I think this is going to be a third meeting. One meeting we had a sell-off. Second meeting we had a rally, and third minutes. We'll see how the market reacts to it.
It's only minutes in the
so it's minutes. Okay. All right, lads. Listen, thank you very much for that. You're very good, and we shall see you on next Monday. Okay.
Okay, Jeff, Phil. Cheers again.
Cheers, guys. Thanks a lot.
See you later.